Well, hello, welcome to the start of the trading day right here in Lagos, Nigeria. The public holiday is over, but let's get to the top stories that set your agenda for the holiday shortened trading week, and definitely going to find out what stocks to watch later on the show in this week. But let's get a check on oil market. Oil prices extended gains today. The market is eyeing output concerns in the aftermath of Hurricane Francine and expectations of lower U.S. crude stockpiles. Brent crude futures, that's for November, that rose 0.2%, $72.91 a barrel. Then we have the WTI US crude at $70.43 a barrel, up over 0.5%. So trying to stay above that $70 range, but we're seeing that disparity between Brent and WTI closing, and it's closing really fast at this point. But most of the markets we track from yesterday, that's for the Naira, was going to get the first trade today for this week, and we'll see how it plays out. Maybe we'll see some strength with the Naira. Then the markets open now for trade, that's the equities market. To other stories, the Director General of the World Trade Organization, Ngozi Okonjo-Iweala, has officially announced her intentions to seek another 4-year term as head of the 166-member country organization. In a statement released, Okonjo-Iweala said she's ready to compete after her current term expires on 31st of August, which expired 31st of August 2025. This comes as member countries supported a proposal from the African group of WTO for her to head the organization for another term when she officially made the announcement more than a month ago. Dr. Okonjo-Iweala, who served twice as Nigeria's finance minister, took office as the WTO DG in March 2021 as the first female and African head of the 30-year-old trade body. And yeah, it's all about rising prices, but easing with the inflation data from yesterday. We see Nigeria's headline inflation rate recorded another decline as it fell to 32.15%, in contrast to the 33.42% rate recorded in July. According to the latest report from the National Bureau of Statistics, the drop in the inflation rate, which is in line with the forecast by economic think tank Financial Derivatives Company, represents a 1.25% fall on a month-on-month basis. However, it is 6.35 percentage points higher than the 25.8% recorded in the same period last year. Well, to dig deeper into prices now and other matters in the market, we have Mr. Bismarck Rwani, is the CEO of Financial Derivatives Company, joining me via Zoom. Great to have you on the show.
Good morning. Thanks for having me.
Yeah, so we see the inflation numbers for August in line with your forecast, but some still say it feels really expensive out there.
No, things are expensive, but thank God we got lucky this time. Our forecast was as close as it gets to accurate, but we got lucky. But I think one thing we have to put out there so that everybody knows this inflation data happened at an aberrational period. One, it was before the petrol price increase. Two, the data was taken at the time of the protests. So we saw price of commodities, actually perishable commodities, decline, and we had not felt the impact of the increase in petrol prices. So what we are saying here is that it is good news, but we shouldn't get too excited because the September data is beginning to point to the fact that more likely than not that we are going to have an increase in the price level. So that's what we are going to see in September. And our forecast and our view is that moderation in inflation is going to be more visible at the end of the year rather than at this time. We had expected it in September, but now it's more likely to happen in December.
So I guess it's safe to say with what we're seeing right now, this moderation or easing, do you think it's something that would be sustained or would be short-lived in the short term?
Yeah, it is short-lived because, and I've already explained that, because it happened in between protests and petrol price increase. However, what we must note is that there's some good news in the fact, to the extent that the imported commodities which will enjoy the duty waiver will start arriving by next week. So that, and then there's been a slight moderation in the exchange rate. So we're still seeing it at 1650, but hopefully, because the global price of crude has come down to 72, you just alluded to it, Brent at 72, that is at least almost 12 to 14% lower than the price at this time last month. So if that is the case, then we just might, and I don't want to start getting excited, begin to see the fact that the petrol price that we are expecting to actually increase rapidly may begin to moderate. If that happens, then we might be having the effect of the price of the duty waiver on imported commodities is slight stability in the exchange rate, and then also the fact that the global price of crude has actually declined. All those things come together makes us feel a bit good that towards the end of the year we begin to see some moderation in inflation.
And talking about moderation at this time, we're expecting the MPC committee. They're supposed to meet this month to decide where rates are going to go now. So looking at this data that we're seeing for August, and that's for July and August, is it something that would make the MPC committee actually feel comfortable? Would they be feeling more dovish a little bit at the next meeting?
No, I think, Ladi, I think that there are two other things that will kick in to determine the direction of the MPC decision. One is that tomorrow, the Federal Reserve Bank of New York is going to come up with a decision on interest rates. There's a 50-50 chance that we may have a 50 basis point cut. If we have a 50 basis point cut in interest rates in the US, it means the dollar will weaken. If the dollar weakens, that means the naira would appreciate relative to a basket of currencies, and commodity prices will be elevated. If that happens, then there's a likelihood that the Central Bank of Nigeria will maintain a status quo. All things point to maintaining of status quo. However, if the Federal Reserve actually does not go as aggressively as expected, then it's possible that the Central Bank of Nigeria begins to weigh its options as to what to do. But generally speaking, we think and we believe firmly that the Central Bank of Nigeria will maintain status quo and see out part of the effect of part of its policies it made and decisions it made 2 months ago. The next meeting after this will be in November, so it's not too far away. And I think that one, because of GDP growth that was positive, even based on base year effects, two, inflation, 2 consecutive months of inflation trending downwards, even though base year effects are coming. And the minimum wage effect has not been felt right now because it has not really been paid. So if that comes in, then the central bank, we are firmly of the view that the central bank will maintain status quo this time, and rightly so.
Right, and talking about the U.S. Fed, everyone's expecting a cut for this meeting and maybe subsequent cuts going forward. And we've seen analysts talk about the jobs market in the U.S. They're wondering if these rate hikes in the U.S. maybe they've broken something in the economy. And I'm looking at Nigeria. I don't know if we actually take note of what's happening the jobs market right here with most of the rate hikes we've had in Nigeria. Do you think we've broken anything in the economy yet?
No, I think that unemployment data in Nigeria has been questionable in some time. There's a change of methodology and change of base year in computing unemployment. So unemployment in Nigeria has become a data point that has become highly a flashpoint for political discourse. So I rather not talk about that. The point is that unemployment, underemployment, sectional unemployment, which is graduate unemployment, and all those things are actually a subject for discussion and controversy. So if you are talking about inflation, talking about GDP growth, talking about trade reports, those points of data are strong and we can hold on to them. But when it comes to unemployment in Nigeria, it becomes very emotive, and so I would rather not talk about it. But coming back to the U.S. if there's a drop in US interest rates, which we think will happen, 50 basis points, it means that the mortgage rates paid by Nigeria and by everybody in America will reduce, like it's happening in the United Kingdom. The effect of this is that our Nigerians in diaspora will have more money at hand because they are paying lower mortgage, having lower mortgage payments, and that will increase the amount of money coming in into Nigeria, dollars coming to Nigeria, and actually strengthen the naira. So even though it's an interest rate decision made for the U.S. market, and in the case of the United Kingdom, by the Bank of England, the effect of it is when you begin to have a lower interest rate environment, means that people pay less on their credit cards, pay less on their mortgages. That means they have more money to spend, and by implication, more money to remit back to their relatives in Nigeria. So that'd be great news for us if that happens. So I just wanted to put it out there. Then the big question, the big elephant in the room is what's the effect of the Dangote refinery lifting PMS into the market?
Right.
I think, yeah.
Yeah. Before we get into that, because that was going to be my next question, and it's all from yesterday. We've all been talking about what next. Now that we have the Dangote refinery churning out PMS. But before we get into it, let's hear what some of our guests had to say about it yesterday.
The oil and gas industry in Nigeria is deregulated and it is internationalized, if you ask me, to the extent that local entities operate as though they are operating in line with international pricing mechanisms, particularly for the purchase of crude. So Dangote is a commercial enterprise. It has set up its refinery with commercial financing at a cost. It has also purchased crude oil both within and outside Nigeria in dollars. And so all of this is going to factor into his production cost. So the difference between imported, petrol and the one that is refined in Dangote will just be probably freight and insurance.
Based on sections 205 and 206 of the PIA, today, NNPC is the sole buyer of PMS from Dangote Refinery. If NNPC claims that the market is deregulated, number one, it will issue a statement based on FEC approval that the market, based on section 205 and 206, like it did for AGO, is been deregulated. And it will not be the sole buyer. It will allow Ipman, it will allow Moman to come and buy products from Dangote. Why is NNPC the sole buyer? So these are questions we have to interrogate and ask ourselves to understand. And combined with the fact that yesterday there was a huge pomp and pageantry, there was a ceremony that was covered by the Nigerian media and international media, everywhere. Press statements, release, and acknowledgement, but only 67 trucks took products yesterday. And there is evidence to show, as we speak, that about 193,000 metric tons of products on different vessels are on its way to Nigeria this month.
Yeah, so Mr. Ronnie, so many reactions there to this burning issue. Nigerians just want to know how possible it is to actually have affordable fuel in this country. But I've been thinking, Mr. Ronnie, if the naira was, say, 460 naira to the dollar, because we keep hearing everything's benchmarked to the dollar, it's because the naira is weak, that's why we have to pay this much. But if we're at 460 to the dollar, will we have this pricing issues with the PMS?
No, I think we should get one thing clear. One, and like the former speakers said clearly, Dangote Refinery, or any refinery for that matter, apart from government-owned refineries, are in business to produce at a profit. Two, they will produce at a price point where their marginal cost equals their marginal revenue. And they will not sell below cost. If not, if they did that consistently, they will go out of business. I think those are fundamental. Secondly, what are Nigerians struggling with today? They're struggling with high price of petrol, unavailability and uncertainty as to when you will get it. Then also about quality. So if you take those three things put together, what Dangote Refinery is assuring the country is that one, we will assure you of quality, we will assure you of quantity, but that pricing is not necessarily in the hands of Dangote Refinery, but in the hands of the market. The market determines the price, so including the global crude price, the a guaranteed margin, and the cost of processing. It's as simple as that. Nobody goes into business to sell below its cost price. If not, that is suicide. So Dangote would not have been where he is today if he was doing that. He would have gone out of business a long time ago in other endeavors. So I think we should get rather than being carried away by false expectations. Yes, it's good to know that the petrol is being lifted. It is a milestone from our own refineries, which we had before, but now we have the largest single train refinery in the world. We have it as a result of the initiative of Alhaji Aliko Dangote to accomplish this feat. But now it's business time. It's time for us to price the commodity at the market and ensure that one, we sustain it, two, the quality is guaranteed, and three, the quantity is there for us. The downtime of Nigerians queuing up and the uncertainty that goes with all of this is actually destructive to value in the country. I think that we should celebrate the commissioning, but we should also use this as an opportunity to reflect on the pricing mechanism that will keep us in business. If not, it will go the same way as all the other sad stories we've had in the past.
All right, so looking at products like PMS, it definitely has inelastic demand. Is it safe to leave such a product to the forces of demand and supply?
Yes, I think that the story of PMS in Nigeria is that, one, how much do we consume? The story that we consume 68 million liters a day is not correct. I think it's more like half of that. The truth is that the PMS is also the proxy for PMS is the price of diesel. The price of diesel today is 1,200 and it's deregulated and liberalized. There's competition there. So I don't fear that, but we should be looking at that as a benchmark to see whether fair price is there. But even if we are to sell petrol at lower than that price, maybe at 900, we should know that there's an amount of subsidy in there, which is being paid by the government through NNPC to ensure that what we have on headline inflation doesn't run away from us. After a while, these things will stabilize and you would have an efficient market, just like there's never any queue, or there's not been any queue for a long time for diesel, there's no queue for kerosene, and there's been no queue for lubricants, because those products are what I call liberalized and deregulated. So we should just ensure that the market becomes more efficient. I think that by this time, next quarter, by the end of this year, we will not be talking about PMS again. The price will be deregulated. The price will be reflective of global price and cost of refining, and we will focus on how to build the infrastructure to reduce the cost of transportation of these things in distribution, i.e., the pipelines, the depots, and the efficient outlets, so that Nigerians and, for that matter, for the whole of West Africa, will be paying the efficient price of petrol and taking advantage of this massive investment that Alhaji Aliko Dangote has made, and for the benefit of everybody across the West African region.
Right. And talking about the benefit of everyone, we know the Platts benchmark prices that's widely used in this market, and everything spec to the dollar. We see even for gas, most of these gas is also sold in dollars. That's most of the contracts we see there. So looking at the minimum wage, 70,000 naira, and that would be able to get you about 70-something liters of fuel at this point. Is it time we benchmark minimum wage to the dollar?
No, I don't think so. You see, our legal tender is naira, and what you are pointing out indirectly is a question of productivity. 70,000 naira, whether it's dollarized or not, how much of output does the Nigerian worker produce at that time? And if not constrained by power supply, water, roads, and all of that. So once we begin to deal with the efficiency of production process and productivity of labor in Nigeria, you'll find that you don't have to, you don't have to have an indexation formula to actually increase the wages tied to inflation, because as productivity increases, inflation begins to decline. And as inflation begins to decline, the welfare and the income of the real disposable income of the people begins to increase. But that, for now, that's very abstract and utopian. The reality is that once we begin to address the problems of growth and productivity and output, you will find that all other things will follow.
Okay.
We've seen this happen recently in Ghana, and we've seen it happen in South Africa. So
All right.
Nigeria will not be any different.
Before I let you go, we still have 4 refineries in Nigeria. Is it time to hand that to the private sector?
Yes. We have, look, listen, in business, people make money profitable and they survive. People that lose money go out of business. The government should not be in the business of refining. I think it's quite clear to us that the government-owned refineries have been badly managed. They've been losing money. We're spending money on turnaround maintenance, so it's time to fling them and sell them off. But there are modular refineries which are even slightly more efficient than smaller refineries. So I think that, quite frankly, the aggregate demand and supply for petroleum products in Nigeria will settle the matter. I think that if in reality what we are consuming is only about 32 million liters of PMS and much lower in terms of diesel, then the risk of having excess capacity of refining in the country becomes really high. So I won't be surprised those who are not viable will go out of business and they can be used for other things, while those who are viable, like the Dangote refinery and the modular refineries, will do well and be able to support the whole of West Africa. Having said that, we should know that excess capacity in Nigeria is not necessarily excess capacity in the whole of West Africa and Central Africa. So I think that even our moribund refineries, which are being resuscitated, might even have a place in the market to support other less privileged African countries. But I think that there's a big advantage. And before I go, I wanted to touch on something. You saw the price of tomatoes has come down by 50%, and the price of palm oil has come down by 12.5%. At the same time, simultaneously, we are seeing the price of rice increase, and we see the price of noodles actually decline. So what it tells you is that inflation is a basket of commodities, depending on seasonality, depending on the cost push and demand pull factors. No, all prices don't move in the same direction at the same time. There are many factors going in. So,
Right.
Thank you
so
always
much.
talk about tomatoes. Now you have a 50% drop in the price of tomatoes.
Yeah, so definitely after the show, I'll go give my wife some money to go to the market since those prices are coming down. Thank you so much, Mr. Rouhani. Always a delight to have you. Thank you.
Thank you very much for having me.
All right, very quickly now. It's the start of a new trading week, and from AfriInvest we have some stocks that should be on your radar. According to AfriInvest, Access Core, they have a buy rating for that. Fidelity Bank buy rating, that's for financial services. Then a sell for flour mills, consumer goods. Then they're saying for Airtel Africa, they're advising reduction in holdings, and corn oil, that's oil and gas. That's a sell. We know last week was a bullish week for the markets, and all sectors we track, all green. We'll see if that plays into this new trading week, but it's a holiday shortened trading week, but we'll see if the bulls still come out to play, or maybe we have the bears come take some profit. That's it from me on Business Morning. I hand things back over to the Sunrise Daily team.